Welcome. Let's take a look now at what's happening in the mining sector. There are a number of headlines we've seen over the last week or so. We've got political disruption, of course, in Kazakhstan. Russian troops have moved in, peacekeeping forces that we're told. There are troops in and around Ukraine at the moment. Now, these are two areas where there's a lot of interest in the commodities space. We've got the recent Powell news, the testimony from the Fed chief, suggesting that the Fed's not necessarily going to run too fast into pulling back in the balance sheet of the Fed, and unlikely to want to push too fast to raise interest rates. And this is seen a little bit of a weakness for the dollar. And we know as commodity traders that when you get weakness of the dollar, you get an uplift in some of those dollar sensitive commodities. And we've seen gains for gold in the last couple of days, gains for silver. But more interestingly, today, we've seen a rise for LME copper, up over 10,000. It's the first time it's been there since the middle of November. Well, let's put all this together and bring in John Meyer from SP Angel. John, welcome. Happy New Year to you. Thanks indeed for joining us as we start out on 2022. Lots of headlines. I haven't even mentioned the fact that China is coming up to its regular annual holiday, which can disrupt the market sometimes. And I know that you've got a note out this morning also highlighting the fact that China's got the Olympic Games coming up. So there's a lot to think about in what's happening in the commodity markets at the moment. What do you see as a priority?
Well, we see the Chinese situation with the logistical disruption and the slowdown for the Spring Festival, that's their New Year break, and the Winter Olympics, and then the Winter Paralympics, as having a softening effect on the market. Now, when I say softening, I think that will affect industrial metals. I think that will affect iron ore and steel and things like that. On the other side, we still see China pushing very hard on battery metals production, electric vehicle production. We see gigafactories fighting to grab hold of supplies of lithium and graphite right now, which are in very short supply. So it's a very interesting place to be.
Just talk to us a little bit about this idea that the political disruption in Kazakhstan. We were talking about this, I think, actually a week or so ago. You were saying mainly that's an oil story, but clearly, are you as a mining analyst sort of worried about disruption from political activities around Eastern Europe, or is this just really a sideshow so far as the sector is concerned?
I've spent quite a lot of time in Kazakhstan, and I've probably traveled around more of the country than most Kazakhs, as I used to follow Petro Kazakhstan and a number of other Kazakhstan mining companies in the region. Yes, there is uranium production in Kazakhstan. I was a director for a while of a Kazakh nickel company, and there is they produce some copper and some gold in Kazakhstan. But essentially, I don't see the unrest that they've had recently as really having much of an impact on the export of any of those metals. The uranium production is a they're hydrometallurgical facilities that are not quite automatic, but not far off it, and they're in remote locations, which would be very easy to manage by the authorities. And I just don't see things being shut down in that kind of way. I mean, it still remains to be seen exactly what sort of form this insurgency has taken, but it looks like it's being quashed fairly quickly, sadly, fairly brutally. But although I spent a lot of time in Kazakhstan, I've never really heard much unrest or dissent from the people I've been with.
Let's just touch on the other point I mentioned as well, and that is where the Fed is situated with its idea that we're going to be seeing interest rate rises come this year. We've seen this recent statement from Jerome Powell. How much of a move amongst precious metals, amongst other things, but of course any dollar-denominated commodities, of course, respond to the dollar's performance. We've seen the dollar pull back in the last couple of days or so. I was talking to clients at IG just a short while ago, talking about the idea that perhaps maybe there is some more weakness to come for the dollar. How much of an impact does this normally form on the metals markets?
Well, if anything, the Fed is saying we're going to do things. It's inevitable they're going to raise interest rates, but they're going to raise them very carefully in a very measured response. And the weakness in the US dollar is because they're really not going to move that fast. I don't see such a lot of weakness, but particularly as we are coming out of the COVID virus pandemic, as I see it. In fact, Omicron is the natural vaccine that the world has really been waiting for, if we're allowed to say that, Remember, I'm a mining engineer and not a healthcare analyst, but I do take my advice off the experts that we employ at SP Angel. So, you know, in reality, the world is coming out of the pandemic. Stimulus is going to be slowed, although I think in the US, if Biden is able to push through his infrastructure support bill, then that should still pump a lot more money into new infrastructure in the United States. What we're concerned about today is that maybe China won't pump so much stimulus into its own economy, and things are going to slow over the spring break and over the Olympics, and that doesn't finish till the 13th of March. That's the end date for the Paralympics, and it wouldn't be right for the Chinese to relax their blue skies policy till the last Paralympians have finished running or doing whatever they do in their races.
I was going to pick up on this point that you mentioned earlier on, actually, about China and the influence that it does have over the markets. So you're suggesting that the fact that the holiday compounded by the Olympics, we could well end up seeing more and more weakness or softness in the market because of what's happening in China.
We're expecting the softness to, shall we say, be extended. Normally, we would expect Chinese traders to return into the market sometime after the 20th of February. And they don't ever rush back into the market. They're usually fairly slow in their new buying activity for the new Chinese year. But this year, of course, this break is really about 6 weeks long. So rather than 2 weeks, we're into a 6-week prolonged slowdown. And I think that gives China a time to just slow things down, which they were talking about last year. So they'll continue to maintain some sort of growth, but I think that growth rate will be at a slightly slower and more measured level, particularly as China is such a large economy now. It's unimaginable that an economy of China's size should be running at 5 to 8% GDP growth. And although those figures were maybe not entirely realistic, it is time that they pull that back a little bit. Now, having said that, I still think commodity demand will be relatively robust, but I think some of the excitement might come out of the industrial metals markets.
Talking about industrial metals, just quickly run through some of the charts if I can. We got copper in today's session actually up over the 10,000 level, albeit very, very briefly. Really strong candle up on the price of copper today. You mentioned iron ore in the context of Ukraine today. We've seen iron ore appear above recent resistance, now trading at 735. So this is a really interesting upside story. I think nickel, again, you mentioned this in your morning note this morning, decade high, I think it is, for the price of nickel. So we then start to lead into the idea of these battery metals that we so often reference. And I know you also talk as well about the highs that we've seen for lithium. So we started 2022 pretty much as you, I guess, predicted. I think when we went into the back end of last year, you were talking about the attractiveness of battery metals and the metals associated with electric vehicles. And it certainly seems like this is coming to pass. Any thoughts on where we go from here? Much more upside to come?
Well, it's a game of musical chairs in the lithium market right now, with different players moving in to grab hold of offtake agreements or even whole companies in the lithium space. And I've been talking to various chief executives running lithium companies, and they've all got ongoing conversations with Chinese and other major players. And I think the game right now is if you want the offtake from these lithium mines, you've probably got to buy the whole company. Clearly, not everyone will do that. We've seen a lot of M&A activity already this year. Rio Tinto buying the Rincon lithium project or lithium company in Argentina. We've seen BHP buying into Kabanga Nickel in Tanzania. That's a $100 million investment. We've seen Tesla buying into Talon in the United States for nickel. So there's a number of nickel and lithium deals ongoing right now, and I just think we're going to see much more of this in the battery metal space. Beowulf, for example, with their graphene tech project in Finland, looks like that's moving ahead at a rapid pace. So there's so much of this happening, and I think it's happening much faster than we normally see projects develop in the mining sector, because companies are so desperate to get hold of that material.
John, we'll have to leave it there, but thanks indeed for joining us as we set out in 2022 some of the headlines affecting and looking at the mining sector in some more detail about some of the movers as we got in this early part of January. That's John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.